And joining us to discuss the impact of the tariffs are the Mikes, Mike Leon, NTD contributor and host of the Can We Please Talk podcast, and Michael Busler, professor of finance with Stockton University. Mike Leon, starting with you, you had a chance to speak with business owners in your home state of Florida. What did you learn?
Hey, Kerry, good to see you, and good to see another Mike on the show. Mike, maybe we'll start our own pod, right? So, Kerry, listen, I travel the state of Florida a lot in terms of talking with small business owners, and obviously I work in Orlando for a boxing promoter. And I was speaking with a council of some small business owners up there, up in Orlando, and the impact of tariffs. I think a lot of times people just think about retail and goods, right? iPhones, the Nintendo releasing that statement about the Switches being on hold because of where they ship them from. But I wanted to find out a little bit more about what are some of the pain points. And speaking with like a hotel director, for example, of this hotel, which is not part of a large chain, it's independently owned and they have 3 locations. And he said the tariffs are actually impacting me because we're projected to lose money this year. And I said, why is that? And it's because of a lot of industries, the disposable income that they do have to do company offsites, to do marketing conferences, networking opportunities, they are now pulling back and they're not staying at the hotel. And the hotel loses revenue based off that. If you think about it, Kerry, blocks of rooms, you think about catering, you think about all the expenditures in terms of meeting space that the hotel would have. And because of that, the trickle-down effect is now the hotel's on a hiring freeze. So anybody over the next 60 to 90 days, there may be some furloughs, and there are people that were potentially going to be onboarded that are now not going to be hired. And so I think that's kind of the effect of tariffs overall. If you just look at it from a 30,000-foot overview, right? Yeah, of course, there's going to be short term, and of course, there's going to be a long-term outlet that I know Mike is going to speak a little bit better about. But there is some real impact right up front. And here is an industry that maybe is not even affected by tariffs because they buy things from distributors, but they're going to feel it backwards, and their employees are going to feel it, especially because now people are going to tighten their purse strings and they're not going to spend that money that they would. And an industry like leisure, hospitality, and travel is one that's going to be affected, unfortunately.
Yeah, you're referring to the secondary impacts of tariffs, not the primary. And so, Michael Busler, going over to you, as you observe the stock market sell off as investors move their money into cash investment products such as money markets, what are your observations?
So thanks for having me. It's a pleasure to be here. So in the short term, we're going to have problems. What Trump is trying to do, when he got into office here, he took a look at the trade agreements we have with virtually every other country, and they're all lopsided in favor of the other countries. Years ago, it was decided that the U.S. would put a 2.5% tariff on just about everything. I'm a free market economist. I don't like to see tariffs placed on anything. And I think Trump's philosophy is very similar. However, with this large imbalance, what's happening is foreign countries are selling a lot of things here because we have a very small tariff and our money flows out of the country. Other countries have very high tariffs. China puts a 25% tariff on most things. Corvettes, for whatever reason, a 50% tariff. European Union, supposed to be a close trading partner. They bring their cars over here. We charge a 2.5% tariff. They charge a 10% tariff, and then they have a value-added tax, which makes it even worse. Harley-Davidson has a big market in India for motorcycles. India places a 100% tariff on Harley-Davidson motorcycles. Harley has to go over there and build a plant. All the president is looking for is fairness. We want free trade, and we want it to be fair. And fair means if there are tariffs, everybody charges the same amount, then we have fair trade. Now, President Trump got into office. He said, look, this has to be fixed immediately. I don't want to convene a committee and get bipartisan support, and we'll go in front of Congress and have town hall meetings, and a year or so goes by, nothing happens. President Trump said, I want this to happen immediately. So what did he do? He put on these tariffs on everybody. What that does, it puts the U.S. in a very strong negotiating position because they need us more than we need them. And secondly, it creates a sense of urgency. And by doing that, I think at least 50 countries have come to the negotiating table. Unfortunately, the stock market, because there's so much uncertainty, people don't know what's going to happen with all this. Stock market hates uncertainty. Because there's so much uncertainty, people saying, well, I better sell my stock. I think a crash is coming. And I believe they're overreacting to this. Once we get these trade deals that are fair, I think we'll not only see the stock market return, but the U.S. economy will be stronger.
Yeah, you're referring to the uncertainty and the psychological impacts. Over to you, Mike Leon. There are economic realities, but as Michael put it, at this point, we're mainly dealing with the psychology of consumer and business sentiment. And you brought up the business sentiment in the hospitality industry in your state. So what signs are you going to be watching to see if Trump's tariffs are working or backfiring?
Yeah, a great question. And I want to piggyback on something that Mike said there, because it is true, as speaking with folks that cover the Treasury Department on our show when we wanted an explainer on tariffs, right? The most Googled word over the past, let's say, 7 days. It was really about Trump uses this as a leveraging chip. And to Michael's point, he doesn't want to wait for congressional support. Yes, once these people come to the negotiating table, he felt that it was always lopsided. So I think people were always looking at tariffs wrong. There's a lot of people say he wants to just crash the economy. No, he just doesn't want to crash the economy. He wants to negotiate because he feels that there wasn't fair trade agreements in place prior to. We can get into whether the semantics of all that, especially with neighbors here in North America. But in terms of like the impact, look, Carrie, I think what I'm going to be looking for truly is going to be projections, right? Because just in that example that I mentioned about the hospitality, right? The hospitality industry could recoup that money, right? Because obviously there are other industries that may not be impacted with respect to how they outsource, manufacturing or labor costs, and maybe they do start to look inward, and then the hospitality industry could kind of make it up in another sector, right? So I am going to be looking over Q2, Q3, Q4 earnings calls. I'm going to be seeing like what it is that CEOs in affected industries are doing to pivot, right? Because there is going to be an impact for people that are in the housing industry. I have my father-in-law works in construction, right? That's a huge industry where we get a lot of our labor from Canada. We get drywall from Mexico. Like that's an industry that's going to have an immediate impact. Our projects here in Florida are going to be suspended because of that. And that's going to be lost revenue that the state is going to have to account for. So those are things that I'm going to be looking for, especially on the ground down here in Florida, because I have people that work in those industries so far that are going to be affected by this. So those are some things that I'm going to see. How are businesses pivoting and how are they going to react and adjust to the tariffs?
Yeah, Mike, staying with you, you mentioned how disruption brings opportunities for those who are willing to take risks and pivot and adjust quickly. Trump's stated goal is to bring national security manufacturing onshore, while, as Michael put it, looking for equal opportunity, like the Harley-Davidson example, for American businesses abroad. So can you have both? Can you achieve Trump's stated goals while calming the volatility?
Me?
I was actually going to Mike Leon. Sorry, Michael.
Okay.
Yeah, two mics, it makes it challenging. Yeah. I'll come back with the same one to you, though, Michael, in a moment.
Fair enough.
Well, and I think this is part of what Mike was actually mentioning right here, because like these countries now have to decide, Carrie, if they're going to alienate, which I've heard in Australia. There was a piece that came out of Australia recently with respect to how much cattle that we get from Australia that is used in a lot of our fast food services industry. And one of the cattlers that was interviewed said, why don't we just neglect the United States market? I mean, we're too big of a footprint and we're too big of, a market to neglect here in North America. That's number one. He knows that too. But also now it is going to be incumbent upon some of these leaders like Starmer over the prime minister over in UK to decide whether or not what is the appropriate response. There are people like China just impacted or imposed, that tariff increase on their end. And to Mike's point, they already had a large tariff increase. So we're going to almost doubly feel it potentially. But now it's incumbent upon these leaders to decide, well, how do we negotiate with the United States? Do we want to play ball with President Trump, right, on the world stage? That's number one. But number two, if we do want to neglect the U.S. market, similar to the example that I gave in terms of the hotel industry, where do we make up that shortage of dollars that was going to come into this country? Where do we make, or to this business, where do we make up that financial, hole that's going to be placed, Carrie? And I think That's why President Trump did this. Look, is it something that I agree with? I'm not an economist. I defer to the economist that's on the panel with me. But like, this is something that businesses are start feeling, but also countries are going to start feeling, because it's whether or not you want to come to the negotiating table, because this is a different administration than the Biden administration. They have a different policy position in terms of how they want to handle global trade and how we all play in this global sandbox together.
Yes, and Michael Busler, over to you. Mike Leon just mentioning the psychology of it. Coming over to you for your economic analysis. Trump wants supply chain national security and to reverse this trend that you mentioned, where manufacturing by the working class in America pretty much gutted over the last couple decades, with production jobs going overseas. So is he going about these two objectives the right way?
So, look, everything Mike said, I agree with. One thing Trump wants, that he will keep tariffs on, there are products that are vital to the national security: steel, aluminum, copper, medical supplies, all of which are made primarily outside of the country. Our steel industry has been decimated. The aluminum industry is doing terribly. So what he wants to do, he's going to keep the 25% tariff on those goods. What will that do? It will raise the price of the imported goods above the cost to produce in the U.S. So now it'll be cheaper to make in the U.S. You'll see more investment going to revitalize our steel industry, our aluminum industry, our automobile industry. Trump believes that in order for us to be a secure nation going forward, we have to be able to produce those vital products. You may recall during COVID, all of a sudden everybody had to wear a mask. Well, all the U.S. companies make the masks in China. So what happened? They made the masks, they put them on a ship. There was millions and millions of masks on the way over here. China said, wait a minute, we're going to need these masks. They turned the ship around, went back to China. We had a shortage of masks. A 30-40 cent mask was up to costing $5 because we had that shortage. Trump doesn't want that to happen again. There are pharmaceutical products that are made in China because it's cheaper. But if China says, well, look, we have a condition here where we need those products, they may not allow them to ship to the U.S., and then we have a shortage. So vital industries that are vital to national security, we have to bring manufacturing back here. And look, you heard on the clip you played, Detroit. They want to make Detroit, again, a great automobile producing city. And already General Motors has announced they're going to increase their output of some of their automobiles. The U.S. auto companies are only operating at about 65% of capacity. So it's not going to take much for them to ramp up to 100%. They could even add a second or third shift. U.S.-made cars will now be a lot cheaper than these foreign cars. And the idea is to get Americans to buy those, ramp up those industries, and rebuild our manufacturing base.
Yeah, really important points in terms of national security, supply chain, and of course, not just with U.S. automakers, but seeing the foreign automakers starting to build here in the U.S. as well to avoid tariffs. So, gentlemen, we appreciate your insights this morning. Mike Leon, NTD contributor and host of the Can We Please Talk podcast, and Michael Busler, professor of finance with Stockton University. Have a great week, gentlemen.
Thank you.
Thank you.